Today we're going to talk about how to prepare to finance a home. You're not going to want to miss this video. Don't forget to follow me each week for videos about the upstate South Carolina region. The first thing we need to look at is to develop a budget. Instead of telling yourself what you'd like to spend, use receipts to create a budget that reflects your actual habits over the last several months. This approach will better factor in unexpected expenses alongside more predictable costs such as utility bills and groceries. You'll probably spot some ways to save, whether it's cutting out that morning trip to Starbucks or eating dinner at home more often. Another big thing is to reduce debt. Lenders generally look for a debt load of no more than 36% of income. This figure includes your mortgage, what type ranges between 25 and 28% of your net household income. So if you need to get monthly payments on the rest of your installment debt, car loans, student loans, and revolving balances on credit cards, down to between 8 and 10% of your net monthly income is suggested. The next thing is increase your income. Now's the time to ask for a raise. If it's not an option, you may want to consider taking on a second job to get your income at a level high enough to qualify for the home that you'd like to buy. Another thing is save for a down payment. Designate a certain amount of money each month to put away in your savings account. Although it's possible to get a mortgage with 5% down or less, you can usually get a better rate if you put a larger percentage of the total purchase. Aim for about a 20% down payment. Get a copy of your credit report. Make sure it's accurate and correct any errors immediately. A credit report provides a history of your credit, bad debts, and any late payments. Start saving. Do you have enough money saved to qualify for a mortgage and cover your down payment? Ideally, you should have 20% of the purchase price saved as a down payment. Also, don't forget to factor in the closing costs and all other expenses for inspections. Establish a good credit history. Get a credit card and make payments by the due date. Do the same for all other bills and pay off entire balances promptly. Keep your job. While you don't need to be in the same job forever to qualify for a home loan, having a job for less than 2 years may mean you have to pay a higher interest rate. Decide what kind of mortgage you can afford. Generally, you'll want to look for homes valued between 2 and 3 times your gross income. But a financing professional can help determine the size of the loan for which you'll qualify. Find out what kind of mortgage, 30-year, 15-year, fixed, adjustable. See what's best for you. Gather your documentation with a lender and they will pre-approve you for a loan. Get your W-2s in order, pay stub copies, account numbers, and copies of your 2 to 4 months of your bank or credit union statements. And don't forget property taxes, insurance, maintenance, utilities, and association fees if applicable. And the last thing I'd like to talk about is seeking down payment help. Check with your state and local government to find out what you can qualify for special mortgage or down payment assistance programs. If you have an IRA account, you can use the money you've saved to buy your first home without paying a penalty for early withdrawal. So I hope you can find these tips helpful for you. Please comment, like, and subscribe to the channel Love Life in the Upstate South Carolina. Reach out to me and let's connect.